Right now, at this very second, euro to US dollar is trading at 1.1633, and I'm going to tell you something that 90% of traders are missing entirely. Every short-term signal is screaming for a collapse, yet the monthly chart is still a strong buy, and the 200-day moving average is sitting just below us like a loaded spring. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. Let's cut straight to the instant market verdict. The session bias is bearish, but fading into a support zone that can trap late shorts and destroy accounts in one liquidity grab. The daily trend is a strong sell, the 4-hour is a strong sell, the 1-hour is a strong sell, and yet the herd is already all in short. The danger comes from that imbalance. When everyone sees the same move, the move often fails, violently. Write this number down, 1.1660. If euro to US dollar manages a 4-hour candle close above 1.1660 today, the entire bearish structure resets. That's the trap door for the sellers. Right now, speculators are net short at the highest ratio in 3 weeks, according to the positioning data I track, which means the fuel for a squeeze is fully loaded. The dollar is treading water on Iran ceasefire uncertainty, and that's exactly the kind of headline that can flip sentiment without warning. Keep 1.1660 burned into your screen. Now let's walk the chart from the top down, and I'll show you why this moment is coiled tighter than most realize. On the monthly, this market is still printing a strong buy structure, and price is holding above the 200-month moving average. That's the institutional line in the sand near 1.1592. That's nearly identical to the psychological 1.1600 handle. Coincidence? No. That's where the big money knows the battle is fought. Drop to the weekly, and the trend flips. It's a sell, with the 20-week moving average rolling over. The daily shows a strong sell. The 20-day moving average at 1.1660 is sloping down aggressively, and price is trading below the 50-day MA at 1.1678 and the 100-day MA at 1.1677. That's a thick moving average ceiling right where our invalidation level sits. If bulls can't recapture 1.1660, every rally is a shorting opportunity. Zoom into the 4-hour. Here's what most traders miss. Price is currently under the 5, 10, 20, 50, and 100 period moving averages, all pointing lower. The MACD on the 4-hour is barely negative, sitting at minus 0.001. That's not momentum, that's exhaustion. There is no hidden divergence yet, but the zero line on MACD is acting like a magnet, which means a bullish cross could ignite fast if price gets above 1.1660. The RSI on the daily is parked at 45, not oversold, so there's plenty of room to fall. But on the 1-hour, RSI is trying to base near 43, and every microbounce is being sold at 1.1638. That level was support earlier, now it's the first resistance. The next support below current price is 1.1628, then the big one at 1.1600. A 1-hour close below 1.1628, and the trap springs lower toward 1.1600. A daily close below 1.1600, and the whole monthly structure cracks, opening a freefall to 1.1575 and then 1.1540. But if 1.1600 holds on a daily closing basis, with the monthly strong buy behind it, this becomes a high probability mean reversion long for the active trader. That's the technical picture. Now let's connect it to the macro pulse because the fundamentals are loading the gun. Yesterday's core news was the US dollar treading water amid Iran's ceasefire uncertainty. Here's the unspoken link. When geopolitical risk spikes in the Middle East, the dollar often benefits from haven demand, but a ceasefire breakthrough would crush that safety bid and lift the euro. At the same time, US-German 2-year yield spreads have widened to their extremes, favoring the dollar persistently, but that divergence is now fully priced in. The real catalyst is this week's jobs data. The market expects a strong NFP print on Friday, which would cement a hawkish Federal Reserve and send the euro lower. But if the data disappoints, or if the ceasefire collapses and oil surges creating a stagflation scare, the positioning unwind will be savage. My 1 to 2 week directional lean is bearish targeting 1.1500, but only as long as the daily close stays below 1.1660. That level invalidates the entire thesis. Do you think the dollar index breaks 105 this week? Comment yes or no right now. I'm tracking consensus across the community. Now we get to the part most traders skip, and that's exactly where the money is made. Keep watching because I'm about to hand you 3 exact trade plans with entries, stops, and targets that you can execute tomorrow, not theory, actionable numbers. Strategy 1, the sniper, conservative. This is the highest probability setup for the patient trader. We are waiting for a relief rally back to the resistance zone. Specifically, we want a 4-hour candle wick into 1.1660, which is the 20-day moving average and our invalidation pivot. If price tags that level and the 1-hour RSI fails to cross above 60, and we get a bearish rejection candle, like a pin bar or bearish engulfing, we fire short. Entry is a limit order at 1.1660. Stop loss goes at 1.1695, above the recent swing high and above the 50-day moving average. Take. Profit 1 is 1.1610, reclaiming the minor breakdown zone. Take profit 2 is 1.1575, the next liquidity pocket. The risk to reward on this trade is 1 to 2.8. This setup is void if we get a 4-hour close above 1.1685 before entry, because that signals the squeeze is already underway. Strategy 1, the sniper, conservative, entry, 1.1660, limit on 4H bearish rejection, stop loss, 1.1695 take profit 1, 1.1610 take profit 2, 1.1575 risk, reward, 1:2.8 R invalidation, void if 4H close above 1.1685. Strategy 2, the active trader, the standard play. This is for those who want to participate in the breakdown momentum without chasing price. We enter on a confirmed break of near-term support. Entry condition, a 15-minute close below 1.1625. That's below the 1.1628 support that is held overnight. Once we get that close, we sell at market. Stop loss is placed at 1.1650, just above the last lower high and the 5-minute resistance cluster. Take profit 1 is 1.1600, right at the psychological number and the 200-day MA line. Once price reaches TP1, we trail the stop to break even and let the rest ride to take profit 2 at 1.1570. Risk to reward starts at 1 to 2.1 before trailing. This setup is invalidated if a 4-hour candle recovers back above 1.1645, because that would indicate a false break and a trap in progress. Type your Euro to US dollar range for tomorrow in the comments now. Let's see who's aligned. Strategy 2, the active trader, standard, entry, 1.1625, 15M close below, stop loss, 1.1650 take profit 1, 1.1600 take profit 2, 1.1570 risk, reward, 1:2.1 R invalidation, void if 4H candle closes back above 1.1645. Strategy 3, the aggressor, high risk, high adrenaline. This is for traders who can lose small and manage risk by the second. We are entering a momentum short at market, right here at 1.1635, betting the weight of the moving averages crushes any intraday bounce. Entry is immediate, with a tight stop at 1.1655, just above the 1-hour MA10 and the last lower high. Take profit 1 is a scalp at 1.1605. Take profit 2 extended to 1.1575. Risk to reward is slim at 1 to 1.5, so this only works with flawless execution and no hesitation on the stop. If price spikes above 1.1655 before you get your fill, the setup is dead. This is a counter-trend scalp within a downtrend, and it's designed to exploit the pre-NFP drift. Only take it if you've already got a solid risk plan. Strategy 3, the aggressor, high risk, entry, 1.1635, market sell, stop loss, 1.1655 take profit 1, 1.1605 take profit 2, 1.1575 risk, reward, 1:1.5 R invalidation, stop triggered, Pattern fails above 1.1655. Never risk more than 1 to 2% per trade. No positions. Through high-impact news. Stops are non-negotiable. This is how you survive to trade the next big move. Here's your summary, and the level that decides everything tomorrow. The single most critical line is 1.1660. As long as we stay below that, the bearish bias is intact, and the path to 1.1600 and then 1.1500 is clear. A daily close above 1.1660, however, and the short thesis collapses, flipping us into a fast short squeeze toward 1.1700 and beyond. Tomorrow's wildcard is the Iran ceasefire headline flow and the ADP employment number. That's the pre-shock before NFP. I'll be breaking that down live with updated levels. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.